Money Day, guys and girls, welcome back to another video with your boy, Learning with Vel. Now, I thought I'd bring out the specs today because my eyes have been hurting me. I've had a lot of screen time recently, so please don't laugh at me in the comments. But today's video is about sharing with you guys what is happening in the United States of America. And of course, the outrageous claims from Donald Trump, the beef between him and the federal chair, Jerome Powell, the Federal Reserve chairman. And last but not least, I'm going to break down for you guys a whopping gold trade that I sent out in the community and give you guys a free, simple strategy you guys can use time and time again when you're executing trades in the markets. So without no further ado, let's get straight into this. Okay, now as always, we want to go through the economic calendar before we ever place a trade in the charts or have a look at any technical analysis. It's really important, guys, to know exactly what's happening throughout the week. And why I wanted to highlight this is because on Tuesday, which at the time of this video is 1:26 Tuesday morning, so today, Tuesday, but if you're watching this in the UK, it's still Monday. CPI is the core inflation data. This is the inflation report. Every single month, you're going to see reports released that provide economical data, which says that the country is either improving or the country is either going further down into the abyss of hell. And of course, at this point, the inflation rate is the consensus is that it will remain the same. The forecast is that it will remain the same. Who knows if it will, if it won't? Of course, there is a lot of backlash. There's a lot of not even backlash, really. There's a lot of animosity in the air between the White House and the Federal Reserve because Donald Trump wants Jerome Powell to lower interest rates. Donald Trump wants Jerome Powell to do as he said, to do as he's told. That's what he wants. He wants a puppy dog. He wants someone that he can say, yo, do this, do that. And he wants Powell to basically jump and say, yes, sir, no, sir, 3 bags full, sir. And Powell doesn't seem like he's trying to do that. Powell seems like he's still got that dog on him. And because he's still got that dog in him, he ain't really trying to confide and conform to the powers of what Donald Trump wants. So in light of that, today we saw gold, on market opening Monday morning, Sunday night for some people. It flew up, right? It flew up. We saw all-time highs, $4,500, bang, hit in an instant. 4,600 on the cards, bang. It was pretty much it. And we saw this simply because Donald Trump has filed a subpoena on the on the Federal Reserve chairman, Jerome Powell. So I'm actually going to react to 2 videos. For those of you who don't know, Jerome Powell has come out and pretty much done a statement. Okay, 19 hours ago, Powell done a statement just saying, yo, look, my man's a bit crazy. Let's take it in.
This new threat is not about my testimony last June or about the renovation of the Federal Reserve buildings. It is not about Congress's oversight role. The Fed, through testimony and other public disclosures, made every effort to keep Congress informed about the renovation project. Those are pretexts. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates.
Criminal charges. Let's just break that down for a second here. Yeah, he's talking about the fact that Donald Trump is sending warning shots, criminal charges, not just because, or he's saying it's nothing to do with the renovations. We kept them up to date with everything that was happening.
Based on our best assessment of what will serve the public, rather than following the preferences of the president.
So what he's saying there is he's saying, look, guys, the Federal Reserve's job is to work for the people. It's not to work for the president. We're not governed by the same body. You can't tell us what to do. So we are going to continue to do what we think is right based off of economical data, based off of what we think is right. We are not going to confide and take the knee and start listening to what you tell us to do, because also the domino reaction to that is if the Fed are seen as now, guinea pigs to Donald Trump, it's going to lose a lot of investor confidence. A lot of money will be lost, guys. And that speech that he led with this morning was based off of what happened 5 months ago. Now, if you guys remember, 5 months ago, Donald Trump and Jerome Powell had their hard hats on. They was in the Federal Reserve basement talking about renovations, and I'm going to play you the clip because this was that Metal Gear Solid moment.
Very expensive work, there's no question about it. And Tim has been with me for a long time, and
Yes,
you're
sir.
in charge of the committee.
Indeed, one of the reasons I wanted to see it was the overruns of the expenses, wanted to figure out why.
Man said, I want to figure out why. That's a big why.
So we're taking a look, and it looks like it's about 3.1 billion. It went up a little bit.
He said, what? 3.1 billion? No.
Or a lot. So
no.
the 2.7 is now 3.1.
What? He can't believe what he's hearing right now. Blasphemy.
I'm not aware of that.
Yeah, it just came out.
Yeah, I haven't heard that from anybody at the Fed.
Yeah, it just came out.
Donald Trump's an absolute G, you know. He's like, yeah, just came out. I thought you'd say that. Let me just pull this paper out here because I thought you would say that on live TV. Come on, man. It's scripted.
Our notes had it about 3.1 as well.
3.1.
3.2.
This came from us.
Look at Uncle Ruckus over there. Yeah. I heard it was 3.1 or 3.2 as well. Shut up, man.
Yes. I don't know who does that.
You're including the Martin renovation. You just added.
Look at Jerome Powell. He's just confused. He's thinking, bro, what are you talking about? What are you talking about?
Higher capital.
Yeah, you just added in a third building. Is what that is. That's a third building.
Well,
including
no,
the
but
Martin building.
it's a building that's being built.
No, it was built 5 years ago. We finished Martin 5 years ago.
Look, he's saying you're talking about a building that was built 5 years ago. My brother, you built this building 5 years ago, cuz what are you talking about as part of the renovations? 3 point what? Something did there? So, yeah, let me calm myself down. But, you know, I laughed at this video multiple times and I really had to share that video with you on this session so you could understand the implications as to why the federal Jerome Powell is now saying, yo, my man's trying to pull an Akon on me. He's trying to get me locked up.
June, or about the renovation of the Federal Reserve buildings.
He's saying, yo, look, man, this ain't about that. This ain't about what happened 5 months ago. He's just trying to put pressure on me for interest rates to be lowered. And now he's threatening me with a criminal case. So, you know, is the renovation really the issue or is it just an excuse? I'll let you guys let me know in the comment section, okay? Now, Powell, of course, is claiming that it's a smokescreen for political retaliation. Personally, we've gone over to gold, to the commodity sector really, and we've seen that. Okay, we've seen what's happened today. We had a high of $4,620 an ounce. We saw the high. We saw it, ladies and gentlemen, as price opened up. Where are we? As price opened up today, what did we see? We saw the gap open. Usually gaps get filled, right? But we saw that gap up and it just kept pushing and pushing and pushing. Now, what does this mean for central bank independence? That's going to be something more significant for us to understand. And I can tell you guys, if legal tools are used to influence policy, markets could react negatively, right? So Jerome Powell is going to really try to stamp down on pretty much going against what Donald Trump is saying, because if he looks like he's bending the knee, it's going to lose a lot of investor confidence. And you know, some of you might be asking, well, why would Trump care about interest rate policies so much? The reason why he cares about this, where's the camera? The reason why I'm saying where's the camera, I'm looking around. I got two screens on, sorry guys, I got two cameras here. The reason why Trump cares so much is because slashing or holding rates affect the economy. It affects elections and it also affects public sentiment. So, you know, there's a huge significant play here, which is having a piece of control over the central banks. Effectively, that's what it is. He wants to have a piece of control over the central bank. If the president can control the central bank, trust me, it's a big play there. It's a big play. So, you know, how do the markets respond when political pressure hits the Fed? Well, we will see, and we usually do see that stocks usually tend to slip off and safe havens like gold, silver, these tend to rise. But what's really interesting is the stock market has been heavily manipulated for so long now that even when gold is rising, the stock market's rising with it too. So I wanted to share with you guys a trade that I sent out in my community. Before I do that, actually, because we can show you guys here. Okay, this is just a profit section. People have been making profits for a long time. Let's go down all the way on the 5th. Okay, so this was last week. Okay, let's go to today. Where's today? Today, how do I get to the signals channel? Cool. So you can see here someone made £761 today following our trades inside the live trading channel. Now this was the trade that was given today. Okay, this was the analysis. So I'm gonna double down on the analysis for you guys and give you a deep dive because I don't want this video to be too long. So if you haven't already, make sure you smash the notification bell so that you can get up to date with other videos I provide. But also guys, the like button does more for me than you could imagine. So if you haven't already smashed the like button, it would really help me. So help me help others by hitting the like button and subscribing. You know the vibes, it's lit side. So what I want to show you guys here is when you understand a bias, which in this case we know is bullish for fundamental reasons as well as technical, but fundamentally we know this is bullish. We're not going to try to think about price pulling down into areas and taking a short. We know that the structure is bullish, the fundamental aspects are high. Donald Trump, Jerome Powell, they're all over the news. We're seeing gold continuing to push based off of the back of this, right? New York Open comes around, we're getting price consolidate before the open. New York Open comes, price starts pushing even more, right? What I like to do guys is I like to go down to the 5 minute. Anything beneath the 1 hour time frame is a good enough time frame for me to trade, because with gold I'm not really going to be holding gold trades for hours and hours and hours unless I've got a really good entry for a buy or sell. But I know that the way how gold moves, chances are you could be in a trade that ends up pulling back to your entry. So therefore I like to get in and out of trades. So for those of you who like to get in and out of trades as well, I'm going to show you a really clean strategy you guys can use here. Okay, so we know it's bullish on every time frame. We've seen it's bullish on the hour. We know it's bullish, right? It's pushing up. We're not just going to buy just because it's, you know, it's pushing higher. No, but we're going to look at each time frame. So the hour's bullish, the half hour's bullish, the 15 minute is bullish. Okay, now I'm going to go down to the 5 minute here. The 5 minute we can also see is bullish, right? We had a higher high, higher low, higher high eventually. Yeah, well, I'm going to go down to the 1 minute time frame because that's where I'm going to have the most fun. Okay, now on this minute time frame I can see that we had a range moving to the right. Okay, we had this quite big range here. Yeah, and eventually price broke above the range. Yeah, so with price breaking above the range, what I'm gonna do first things first is understand that this is a higher high, higher low, and another higher high up here. So straight away what I'm gonna do is I'm gonna get a Fibonacci tool and I am going to mark out this low. If it can let me, I'm gonna mark out this low down here to this high. Okay, straight away that low to that high is going to tell me that inside of the green to blue range in here, the 62% down to the 88%, this is going to be my kill zone. This area is going to be where I now need to find a reason for me to enter a trade, right? That's what this means. It means I need to find a reason to enter a trade inside of this area. Okay, now because I'm on the minute time frame here guys, you can use institutional candles, institutional levels, you can use breakers. There's so much different strategies you can use which can give you a good result. It's that simple. It can give you a good result, it can give you a quick result. Doesn't mean it will give you the best result. You may not get the 100 pip reaction, you might only get a 10 pip reaction, you might only get a 5 pip reaction. But from what I use and how I use it, it tends to give me between a 30 to 150 pip range. If the markets are gracious, then I can get a bit more, alhamdulillah. So now what I'm going to show you guys is this. Okay, when price is coming down, okay, these are just in the way. Let me move these out of the way. Oh, let's go back. Cool. So now that we've understood this is the zone in here, what I'm going to look at guys is I'm going to highlight all of these sell to buy candles. This is an easy way for you guys to be profitable, trust me. If you highlight each sell to buy candle, you've got one here. Let's just put this as a eye candle because it's yellow. You've got one there. You got the second one here. Sell to buy candles. Okay, second sell to buy candle here. we've got a third buy, was it? Third sell to buy candle here. Okay, and then we're gonna have one more here. Okay. Now, these sell to buy candles, okay, is these black candles that I've highlighted before. You get the move up and then price coming back down, playing into it. I could mark another one here, but it's so close in between these zones. I would never really take two trades, one here and one there, you know, because they're so close. And this is the beauty, because we're on a smaller time frame here. The distance from, you know, from here to here is not a lot. It's 6 pips. You know, the difference wouldn't make it more significant for me to enter a trade twice in such a short space, right? So we've got our 1, 2, 3, 4. We've got our 4 areas, and what we're simply looking for, okay, now that we know that price has pushed up, yeah, we know that price has pushed up, it's broken the high. What we now want to do is we now want to wait and see if price can pull back down into these zones, and if it can, then we want a reaction. Now ultimately I'm always going to favor a reaction, okay, around here. Let's make this one darker. Make this one. Okay, I'm always going to favor a reaction between the 79 excuse me, to the 88. 79, between the 70 and 79, and wicking the 80. If it wicks the 88, amazing. But really I want the G spot. My G spot is the 79%. Okay, so we're gonna play this out and see how price reacts. Price is coming down quite aggressively, and what we're looking for is a reaction. Okay, now what we can see happening very quickly here, guys, is we had a reaction out of this zone here. If I just make this easier for us to see, I think because I got on yellow glasses I can't see it myself, but yeah, cool. So we can see here we get a reaction. We get one reaction, second reaction, third reaction. Now, as I told you guys earlier, there is no guarantee as to how many pips you can get as a reaction. In some cases, this would have been enough maybe for you to go risk-free on a trade. But my point in what I'm saying to you guys is the market doesn't care about your criteria. You may get the reaction you want, but it may not fit your criteria, meaning you might get a positive pullback. Price might start pushing up from the area that you wanted to push up from, but then it might go flat. And that's when you've got to be able to understand that off of a smaller time frame zone, once you're seeing structures broken on the smaller time frames, you should have more confidence, but you should also know if you're taking a trade off of a smaller time frame, then you should manage your trades off of a smaller time frame. So price essentially comes down into this area. We then get, of course, a few touches in this area here. Okay, we get a few touches off of the 79%, that sweet spot, and now price pushes up. Now pay attention to this, guys. As soon as price pushes up, I want you guys to pay attention to what's happening over here. As soon as price closes above this candle, this buy to sell candle, as long as price closes where it is, then to me that is going to be a subtle breaker structure. With that being a subtle breaker structure, I would then want price to push down and play into this black candle, this sell to buy candle here. You guys can call it a fair value gap, this blue candle here with all of this space, that fair value gap. Yep, a lot of you new millennials is, you know, FVG traders. Well, you know, price breaks the high and it comes back down, and providing it comes back down, we can get a trade off of the imbalance filled and as off of this candle. Let me just highlight this candle. So I'm gonna put an entry. Right there. Okay. So my first entry actually would be like this. Let's remove these because they're starting to get a bit messy for me now. And then what I'm gonna do is I'm gonna have this box. Okay, and this box is going to be up here like this and like that. Okay, and this is going to be our first entry, first pullback, shout out Bosco. Okay, first pullback zone. What's going on? First pullback zone. Yeah. Let's see what price does. Let's go on a smaller time because I know it's going to move too quick. Okay. Now look, straight away price closes above this zone here. Okay, so it breaks the structure for us and then it pulls back down into the zone. Right. Now, what have we seen happen here? Okay, as far as I'm concerned, if you go on a line graph, you can see you've got a high here that needs to be taken out. You've got a high here that needs to be taken out. So by the time price pushes up and closes above this high over here, we now want a pullback so we can get to a second entry. Okay, so I'm now going to highlight for you guys where I would get in for the second entry. Where is the here we are. Okay, now we could do two areas really, but I'm just going to do this one here. I'm going to say second pullback. What's wrong with me? Second pullback. Okay, let's play it out. So the second pullback area is going to be on this line here. Now pay attention to this, guys, okay? Because if we go back on the line graph, what we can see is this was a high, right? But then price made a low, fell to make a new higher high, and then price started coming down. Okay, so some could say we was then turning bearish. However, you know, for us, we're looking at price pulling back into this point of origin where it was originally buying from, and that's the reason why it's triggered from this area and pushed up higher. But technically speaking, whilst price was on the descent here, we also had a previous lower high here. So with this lower high now, I want price to close above this lower high. Once it does that, if it pulls back into that zone, it's also another area where I can take a trade from. So I really want to highlight with you guys on the 1 minute time frame, things can happen so quick, so fast. They can happen so quick and so fast that actually you can miss these opportunities, guys. You can really miss them. So with price closing above this lower high here, you know, I'm going to mark the last sell to buy candle, which is this one, and this one is going to be called the third pullback. Okay, and this is how we're going to successfully stack. Now price needs to close above this lower high, right? Once price closes above this lower high, above this high, the structure is now broken. If we go back onto the line graph, structure is broken, price is closed above it. So guess what? When price comes back down, we've got another area. I'm going to work off of this buy to sell candle again. This buy to sell candle, which is here. Okay, price doesn't look like it comes there, so we don't catch that as an entry. It's no problem, it's no sweat. Okay, as it stands, the target that we want, of course, is up here. We want this target here, which is of the high, okay, the previous high. And if price can hit minus 14.6, that's always going to be our first long range TP target, if I'm honest with you. And that's just simply because that's our first target for our Fibonacci. Okay, so we've got 3 entries. Okay, we've got one down here, the second one here, and the third one. So if I move that across here like this, the third one should be on this level here. Okay, so off the third one now, prices come down, pushed up, come down again, and some could say it's going to come down and play into this zone and you can get a fourth pullback for another entry. But the thing is, guys, for me, right, I'll be very honest with you. Let me remove this fib. I'll be very honest with you. The higher price is going towards this all-time high, I'm not going to be looking to getting into more trades on a pullback. I'm going to be looking and I'm going to be focusing on just taking my money and running, right? So eventually now, what do we see? We see something beautiful here, right? Price keeps pushing higher and higher. It reaches our minus 14.6% on our Fibonacci, which is amazing. It means we catch over 300 pips. It's a nice 4-to-1 R&R here. Essentially, what's always important to make sure, guys, is you cover your candle that you're playing out of. So whichever candle that I'm playing out of, in this case, it's that black candle. I want to cover the range and give price space to breathe. Okay, if I give price space to breathe, then it increases my probability of being successful. Okay, it's really important with gold that you allow it some space to breathe. Otherwise, if your stops are too tight, then you're always gonna, you know, unfortunately be frustrated at, you know, your entries not being precise enough. And you know, if we're trading off with a 1 minute time frame, we should be able to give ourselves much more space for price to breathe. If we're on a 15-minute time frame, that's a whole nother kettle of fish, guys. So we can take one entry, the second entry, the third entry. These are all clean entries, guys. For the 1 minute time frame, we waited for a structure break. We saw a structure break take place. Once we saw the structure close above this high, and then this one over here, and then this one over here, we just waited for a pullback into the first, after the first break. Then once price broke above the second one up here, we waited. So rather than just jumping into the trade haphazardly and panicking and saying, oh, it's going up, let's buy, we sat down, we waited, price came back into the zone where we knew it was going to go from. Okay, and it pushes up again, pushes up, subtly closes above this high, which then pushes down into a zone. Maybe you guys catch this trade, maybe you missed it. If you missed that one, it's not the end of the world. Okay, because what we do see happening, which is much more cleaner for you guys to take, is when price pushes down, pushes up again, closed above the high, we now look at this last buy to sell to buy candle, excuse me, and look what we see here. Fourth pullback. Okay, look what we see here. We see price come down into the zone right over here, and then price pushes up. Now look, guys, eventually all good things are going to come to an end. Yeah, things aren't going to last forever. So as much as we've had price pull back, and we've had, you know, the first entry, second entry, you know, now we've had a third entry, and things is looking juicy, you have to understand that at some points, you know, this here, I'm going to leave this one red because let's just say we never got this one. Yeah, let's just say we thought about it, but we hesitated, right? But this fourth one here is a clean pullback, which is just perfect. It's beautiful. Okay. Sometimes, guys, you're gonna blow yourself out because you're not trading to how you know is the best way to trade. And the best way to trade is to be patient. It's not to just have the best strategy. The best strategies work with people being patient. That is where most people are going wrong here. It's not about having the best strategy. It's not about reading all of the news. It's about being patient. Being patient pays. I've been persevering through this fucking maze. Me and Jay extorting charts that we the fucking craze. I wrote those raps a long time ago because it's real life. You have to be patient. You have to be patient enough to be able to catch an opportunity. So the only thing with gold right now that I say to everyone trading it is extremely volatile, but that's what we live for. We live for moments like this. So me personally, I wouldn't recommend any of you trading funded accounts in these conditions because a funded account could screw you over. I'd recommend you guys depositing $100 to $200 in your account and trading that shit. That's what I'd recommend, because from $100 account, I mean, look, guys, I grew $40 to $1,250. I don't even need to talk theoretically. I'm talking facts here. If you click the link in my bio, you guys can see that I traded $40 and turned it into $1,250. These things are possible, guys, and it was all through gold. And I do these small account flips to show you guys you don't need to have thousands of dollars. You don't need to have that six-figure dream, and because this guy's made a video on YouTube, these prop firms is gonna pay. You don't even know if that shit's real. You don't even know if that shit's real. You don't know if bro's got an endorsement deal with them. You don't even know if he owns a prop firm. So my point is this, guys. Believe in yourself by investing into yourself. Now, this strategy was one of many that I used, but it was one that I've used in the community. As I showed you guys, I sent it inside the community, and I also gave the analysis behind it. And of course, you know, people was happy with the trade. So if you guys want access to my Discord community, it is free. You've just got to simply click the link in the bio, come over to the Telegram, follow the steps, and hopefully I can see you guys on the other side. And I want to ask you guys, if you haven't already, if you've managed to get to the end of this video, please drop in the comment section LTN. No, TLN. Drop in the comment section TLN. And I'm going to do something special for you guys. And please subscribe if you haven't already, and smash the like button. If you ain't smashed the like button and you ain't subscribed, I don't know what you're playing at, my guy. I really don't know what you're playing at. A nigga's trying to get it. This is how a nigga's hustling now. A nigga's hustling on YouTube. So yeah, man, I'm trying to push to 5K subscribers. I've been on 1,000 subscribers for a long time. Tell me what I got to do to get to the next stage, guys. If you lot want me to do any other types of content, if this was too long today, I thought I would do a very deep dive into, you know, the world of gold. What's happening with gold? It requires some time sometimes. So, you know, this is value. That's all I can say. This is value. So take it or leave it. I hope you guys appreciate the efforts. I'll always be here, and I'll always be on the charts, providing you guys with more analysis, more trades, more laughter. Thank you for your time. I'll see you guys on the next one. Always remember, every day is money day. Peace.